Welcome to ForexTV.com's PM Exchange. It's Monday, March 10th. I'm Remy Hoki. Today I'm joined by David Powell, currency analyst at IDEAglobal. Good afternoon, David.
Good afternoon, Remy.
Happy Monday.
Thanks.
Well, as we start off the week and shift through the latest developments in the equity as well as commodity markets, let's also talk about the implications of the weakening dollar. Last week, we saw the U.S. dollar fall to record lows against the euro as well as the Swiss franc, and we also saw the U.S. dollar index fall to record lows. So first and foremost, if you could tell us any of your concerns about the weakening dollar in the current landscape.
Well, I would say one of the biggest concerns at the present moment in time to do with the weakening dollar is the fact that oil is rallying to offset the weakness in the dollar. Of course, oil is traded in the world market and quoted in dollars, as well as all the other major commodities such as gold. So essentially these commodities are rallying to offset the weakness in the dollar, and this is leading to higher levels of inflation around the world, but more notably in the U.S., where we use the dollar, of course. So it's turned into a bit of a vicious cycle in that the dollar sell-off encourages higher oil, which encourages greater inflationary pressures in the U.S., making it the Fed's job a bit more difficult, and also biting into the spending power of U.S. consumers, as essentially a rise in the price of gas acts like a tax and weighs on non-gas consumption. So it will serve to weaken the economy and raise inflationary pressures, two things which, of course, are not good for the U.S. economy or the Federal Reserve.
Well, indeed, David, in the past few sessions, we've been seeing NYMEX crude oil top record highs. And in today's session, we saw crude oil hit a high of 108 a barrel, which is hard to believe. And also earlier today, on the heels of Trichet's comments, we saw Eurodollar ease back a little bit. But given that the U.S. dollar has been hitting record or multi-year lows against the major currencies, do you expect to see an intervention from any of the central banks soon?
I don't expect to see intervention from any of the central banks soon. Trichet this morning was on the headlines in Basel, Switzerland, where the G10 central bankers were meeting, indicating that he, as head of the ECB, is of course worried about volatility in the FX markets, and once again stated that he noted with strong interest that the U.S. has stated a strong dollar is in its interest. So he said this before, though, and it really hasn't changed the outlook for intervention. He hasn't really gone up to the next step on the intervention ladder. So essentially, very little has changed, and there are no real threats, especially at a time when the U.S. and the Eurozone are trying to convince China that they have to let the market determine the rate of their currency, as well as other East Asian countries that have pegged their currencies. So it'd be very difficult for the Eurozone or the Japanese or the U.S. to really intervene and put aside the free market determination of currencies at a time when they're trying to force that system on other countries in Asia.
Okay, David, now that we've covered the basics in the FX market, let's take a closer look at Eurodollar. We do have the FOMC coming out with their rate announcement next week. And in the near term, we do have key U.S. data, including international trade and the ZEW survey in tomorrow's session. So if you could give us your near-term forecast for the Eurodollar.
Sure. The conditions remain in place for further dollar weakness. Last Friday, we had a high of 154.50 in the aftermath of the very bad jobs report, and that now will act as a level of resistance. But it could give, and we could move to 155, but we see that as being the top of this dollar sell-off, essentially creating a new range for Eurodollar over the multi-week horizon of 150 to 155. And of course, the risk is, though, is that we do breach the top of that range and go to 157. But at this stage, it's not really our core scenario, given that 155 is a very strong level of resistance, and that most of the bad news is already priced in to the market. The bad news in terms of the U.S. economic deterioration. So we'd really need some kind of further developments in order for us to break that level.
Well, David, in the current environment, there's plenty of risk aversion, and we've been seeing the Japanese yen as well as the Swiss franc benefit. So what is your outlook for the low-yielding yen as well as Swiss franc against the major currencies?
Right. Well, both of those currencies today and over the last few weeks have been supported by declines in the equity markets around the world. Dollar yen was unable to break the January 2005 low of 101.65 last Friday, and once again that level was tested today and held. We wouldn't be surprised to see a break of that level in the event that the dollar sell-off continues and we reach a level of 155 in euro dollar. However, the next major level of support comes in at 101.25, which is the 2000 low for the pair. And we really expect that to be the bottom here. And like I just said, that would correspond to euro dollar trading around 155.
Okay, and last but not least, now that we've covered the other majors, if we could shift our focus over to the economies of Australia and Canada. We got the central bank decisions from the RBA as well as the BOC. So both from a fundamental as well as a technical perspective, where do you see the currencies headed in the near term?
Right. Well, on Monday throughout the North American session, the commodity currencies fell out of favor. Essentially, they all sold off against the dollar. However, we view this sell-off as somewhat temporary. The fundamentals do remain strong for Australia and New Zealand, despite the fact that both central banks have signaled that they will be on pause. We do feel this is an attractive buying opportunity. However, we see some divergence within the commodity currencies. Dollar CAD now is just below parity, and Monday's afternoon session it was battling to break through the March 4th high of 99.75. And a break above this would suggest a further run through parity to 101.65. And the fundamental outlook really is not as solid for the Canadian dollar, given the fact that the Bank of Canada has already embarked on a path of monetary easing. And at their most recent meeting, which was the first headed by the new governor, Carney, the Bank of Canada in some ways surprised the markets, not entirely. A number of people had expected it, but it wasn't a foregone conclusion, and cut by 50 basis points, a real kind of slash and burn move. And so that does not bode well for the Canadian dollar moving forward. So we do expect the Canadian currency to lag in its performance vis-a-vis the Australian dollar and the New Zealand dollar.
Okay, David, as always, thank you very much for coming on the show, and thank you for your insight.
A pleasure to be here.
This has been your Forex News with David Powell from IDEA Global. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended today's session in the red, with the major indexes down over 1% on the day. U.S. equities saw continued weakness as crude oil futures soared to all-time highs and as more negative news from the financial sector were released. Wall Street struggled with the prospect of even more write-downs from the financial services sector and also over concern that economic data will point towards a recession in the U.S. Also dominating the headlines today, New York Governor Eliot Spitzer issued a public apology at a press conference in Manhattan. Earlier today, the New York Times published a story on its website linking Spitzer to a prostitution ring. In his brief afternoon statement, Spitzer apologized to his family as well as the public, but did not address the allegations. At the closing bell, the Dow Jones Industrial Average tumbled 153.34 points to close at 11,740.15. The tech-heavy Nasdaq plunged 43.15 points to close at 2,169.39. And the S&P 500 fell 19.96 points to close at 1,273.41. In the fixed income market, U.S. Treasury bonds rose with yields lower on the day. Bonds rallied for the third straight session as deteriorating credit conditions led to safe haven moves into Treasuries. The benchmark 10-year note rose with its yield down at 3.45% from 3.54% late Friday. And the 2-year Treasury note rose with its yield at 1.48% from 1.53% late Friday. In energy, NYMEX crude oil prices climbed to yet another record high as prices soared above $108 a barrel to a new inflation-adjusted high. On the NYMEX, April crude oil touched 108.21 and closed out the session up $2.75 on the day. day. Crude oil futures have been rallying on U.S. dollar weakness and also as investment funds continue to flow into the energy sector. Meanwhile, AAA and the Oil Price Information Service reported that the national average price of gasoline rose to $3.222 a gallon. Elsewhere on the NYMEX, April heating oil futures added 2.64 cents to end at $2.9734 a gallon. The contract hit a record high of $2.9837 a gallon earlier in the day. Meanwhile, April gasoline futures gained 2.06 cents to settle at $2.7149 a gallon. Nat gas futures gained 25.5 cents on the day to close at $10.024 per million BTU. Over in the metals complex, gold futures were lower, extending weakness from the previous week. The April contract lost $2.40 to end at $971.80 an ounce on the COMEX division of the NYMEX. Other metals pulled back today with May silver down 46 cents at $19.79 an ounce. May copper fell 13 cents to close at $3.79 a pound. Now we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound for MoundReport.com with the week ahead for the week of March 10th. A critical week in a couple of sectors here. Main focus is going to be on the grain markets. We saw a major lock limit down move in soybeans on Friday. And the interesting part about the lock limit move was the March contract, which was in first notice, didn't have a limit. So we're seeing it down over $1 on the close, which let a lot of momentum follow through to this morning's move, which basically gapped lock limit down again this morning. Since then, though, we've seen a strong recovery in the grain markets, and really what this is some short covering going into tomorrow's World Ag Supply and Demand and Crop Production Report. The big report's at the end of the month when we see the acreage report and plantings numbers, but up until then, what we're really watching is the market's exposure to supply-side issues. We just saw Zimbabwe come out and say that 80% of their plantings were rained on, and they had a late planting season. This is going to cause a net shortage for that country, and you can start to see that type of thing happening quite a bit in the upcoming months in grains. March is a critical month, though, and I expect to see a strong sell-off in the grains continue through the end of the month. It's an opportunity to get short, develop some put positions, but the option premiums are basically evaporating out of the grain markets very, very strongly today. Great opportunity to be a buyer of some options. It's a cheap deal Monday. Looking at other markets, crude oil's mega rally here is about to come to an end. We did see a bit of a change in trend in the inventory supply numbers from last week, but I don't expect that to continue. And as we get overwhelming supply in this market for this time of year, we're going to start seeing price catch up to the supply issue and a strong selling incurred, not only in crude, but also in RBOB and heating oil. Last but not least, let's take a look at the metals. You got gold and silver absolutely collapsing this morning. We were down over $1 in silver. It recovered, and now it's selling off again. You have platinum down over $100. Electricity's back online for the most part in South Africa, the main thrust behind the platinum move. But overall, the metals markets are probably the most overbought and exposed of any market in this entire commodities industry. Grains might be a tight second there, but gold and silver are both seeing some selling pressure, and there could be some extreme volatility to the downside. So take advantage of this opportunity to buy put options in gold as well as silver, and look for the U.S. dollar to rebound in the next 2 weeks as the Federal Reserve interest rate policies met with a little bit more appreciation for their approach than in recent Fed meetings and recent months. That'll do for me, James Mound, MoundReport.com, in the week ahead. We'll see you next week.
That was James Mound from James Mound Trading Group with his commodities outlook for the week ahead. And that wraps it up for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.